Have you ever heard traders talk about NFP Fridays and wondered what is even the big deal? Some traders even pause their trading for the day and wait until the NFP numbers are out. That's because NFP or Non-Farm Payroll report is one of the most powerful news events in Forex trading. In this video, we are going to explain what NFP is in simple terms and why it's so much of a big deal for traders and how much it affects Forex trading. If you are completely new to trading, by the end of this video, you would understand why experienced traders keep their eyes on the chart on the first Friday of every month. So, what exactly is NFP? NFP is an acronym that stands for Non-Farm Payroll, and it's a report released monthly by the US Department of Labor. In simple words, it shows how many jobs were added or lost in the US economy in the previous month, but it does not include farmers, government employees, private household workers, and non-profit organization workers. You may ask, why those exclusions? Well, that's because those sectors are seasonal or irregular, and the essence of the NFP report is to give a clear picture of core job growth in the US. Think of it like monthly health check of the US economy. If more people are getting jobs, it means businesses are growing. And if more jobs are lost or fewer jobs are added, it may mean that the economy is slowing down. Now let's move on to see why traders care about NFP. Well, that's simple because jobs tell us about the strength of an economy. Like I said before, when there are more jobs, it means that businesses are hiring, people have more money to spend. It means that the economy is growing, and that's very good for the US dollar. So that means that the US dollar will tend to strengthen. But when fewer jobs are created and jobs are lost, it may mean that the economy is weakening and investors will expect slower growth, and that's bad for the US dollar. Keep in mind that it does not stop there. The Federal Reserve, which is the central bank of the United States, pays close attention to NFP reports. If the job market is strong, meaning that more people have access to money, the Fed may raise interest rates to control inflation. And when interest rate is increased, it means that the dollar is also going to strengthen. That's why every first Friday of the month, traders are on high alert. A single NFP report can cause big moves in pairs like the Euro USD, JPY USD, and USD JPY, and even gold. Now that you know what NFP report is and why it is important, let's see when the NFP is released. Yeah, when exactly is NFP reports released every month? Like, if you've been following this video so far, you must have heard me say that the NFP report comes out on the first Friday of every month. So the big question is, what time on the first Friday of every month? The NFP report is released on the first Friday of every month by 8:30 a.m. New York time. That's the Eastern Standard Time. This means that if you are in another part of the world, you will need to adjust to your local time. For example, if you are in South Africa, that will be 2:30 p.m. If you are in a country like Nigeria, that is 1:30 p.m. So since you know that it is 8:30 a.m. Eastern Standard Time, just adjust the time to your local time to know what time in your country the NFP report is released every first Friday of the month. Now, because this report comes out at the exact time every month, many traders literally mark their calendars and wait for the report. Some traders even call the first Friday of every month NFP Friday, and this is because the market sees like heightened activity immediately the report is released. In the course of this video, we are going to see a practical example of how NFP influenced market activity for a particular month. However, before that, let's quickly see how the NFP affects Forex charts. The moment those job numbers hit the news, that is the moment the NFP report is released, we usually see increase in volatility. So this means that there will be fast price movement over a short period of time. If the NFP numbers are better than expected, the US dollar strengthens. That means pairs that have USD as the quote currency may drop. So you would see a drop in the chart of currency pairs like Euro USD, and GBP USD. On the other hand, pairs that have USD as the base currency may shoot up, so you are likely to see an increase in price for currency pairs like USD JPY. However, if the numbers are worse than expected, then the US dollar weakens. And what that means is that pairs like Euro USD may spike up and pairs like USD JPY may drop. And you should note that it is not just Forex pairs. Other instruments like gold and oil may also see increased activity because they are all connected to the US dollar. The key thing to note is that the market does not always move in a straight line. Sometimes you will see whipsaws, that is big spikes in both directions, before you now see a clear market trend. Now that you understand how NFP affects the Forex chart, how do you trade NFP smartly? Here's the truth. NFP can be exciting, but it is also risky to trade. When the report comes out, spread widens, slippage happens, and the market can move in both directions in seconds. This is the reason why many beginners lose money trying to catch the first move. So, what is the smart way to trade? First, you want to be patient. Instead of jumping into the market at exactly 8:30 when the report is released, you can wait for 15 to 30 minutes before you enter the market. That way, you see the market trend clearly. However, if you're a bigger risk taker and you just know that you don't want to miss the first moves, you can also choose to take the risks. But it is always better to factor in risk management. Be patient. The next thing is that before you enter the trade, you want to wait for some sort of confirmation. Check the candlestick patterns that are forming. See if price is breaking key support or resistance zones. So just check for confirmation using other tools like candlestick, support and resistance, Fibonacci retracement. Just check to get a confirmation before you enter the trade. Lastly, you want to manage risks. Always use a stop loss. Set your stop loss so that you can manage your losses just in case the market goes against you. Another thing you want to keep in mind is that because you predicted the NFP report and the report actually goes in line with your prediction or is even better, it does not mean that you should now open the biggest trade you've ever opened in your entire trading history. No, you don't have to trade unnecessarily large lot sizes or use very high leverages because you are trying to profit everything you can take in from NFP reports. No, trade with lot sizes that you can handle in case the market goes against you, and just make sure you are managing risks properly. Remember that the goal is to make sure that you don't blow your account so that you can trade another day. Even experienced traders sometimes get caught off guard with the NFP reports, so be careful. Now that you know what NFP is and you know the risks, let's see a practical example of NFP trading and how it influences price. Let's look at a real chart so you can see how the NFP actually moves the market. This is Euro USD 15 minutes chart on Friday, August 1st, 2025, the day the US released its non-farm payrolls in August. That's for July. Now, here's what the numbers said. Here's what the data from non-farm payrolls was. Only 73,000 jobs were added, while the forecast was about 110,000. So, the number of jobs added was less than what people were predicting. Unemployment rate rose slightly to 4.2%, and previous months were revised down by 250,000 jobs. Only about 73,000 jobs were added to the US economy in July. This figure significantly missed the consensus forecast of 110,000 jobs. So people were predicting that there will be 110,000 jobs at least. But when the data was released, only 73,000 jobs were added. So the number of jobs added was less than the expectation. Unemployment rate rose to 4.2% in July, up from 4.1% in June. So there was increase in unemployment. So in plain English, the report was weak. there was disappointment. Not enough jobs were created, and there were signs all over that the job market was losing strength. Reports like this weakened the US dollar. Now let's look at the chart. Before 8:30 a.m., the candles were very small and quiet. Traders were waiting for the news. At exactly 8:30 a.m., the reports dropped and we got huge green candles shooting up. That was Euro USD spiking higher because the dollar weakened instantly. After that, from 8:45 to 9:15, the bullish push continued with more green candles as traders joined the move. At around 9:30 to 10, you can see red candles appear as traders start taking profits and the market cooled off. Now I want you to keep in mind that the Forex chart used like in this example, in this practical example, was set to the New York time, and that's why I'm using the actual 8:30 like NFP reports time. This practical example teaches 3 important lessons. First, the market is often calm before big news. Traders are waiting to see what the news report is going to be to make a decision. Now, next is that at release, you can get explosive moves in seconds. In this case, it was upward because the dollar was weak. Thirdly, after the spike, a trend can continue for a while before profits taking slows it down after the session. So the takeaway is simple: weak NFP, weak dollar, strong Euro USD. Just before we carry on, here are a few things that you should know. First, NFP is not the only big news report that traders watch. Another one is the PCE report. Here is the key difference. The NFP focuses on jobs, how many jobs are added or how many jobs are lost. While the PCE, on the other hand, focuses on how much the prices of goods and services are changing. The Federal Reserve actually pay close attention to both. While the NFP shows them how many jobs are added and lost, PCE tells them how fast the prices of goods and services are changing. And together, these two reports gives like a clear picture of what the US economy is like. Secondly, initially I told you that it is good to wait for confirmation. So you want to wait for 15 minutes so you're able to see the trend, see the candlesticks that are forming, and then you make informed decisions. However, some traders use pending orders. So not everybody waits for 15 minutes. Others use pending orders. So how this works is that before 8:30, traders place 2 positions, one above and one below the market. And they also use stop losses for both positions. So whichever way the market jumps, it moves in their favor because they have 2 positions. Some other traders who are a bit more conservative will wait for the first 15 minutes candle to form so that they can see the proper trend. And if you are like being more cautious and more careful, you may also want to consider waiting for the first 15 minutes candle to form. But at the end, it depends on your trading strategy. You want to use pending orders or you want to wait for the first 15 minutes candle breakouts. Both strategies come with their risks. So you can try out both and see the one that works best for you. Thirdly, you should keep in mind that risk management when trading NFP is just as important as your setup. So your risk management is as important as choosing the strategy you want to trade with. During NFP release, slippage can happen. What this means is that your order gets filled as the worst price than what you wanted. Aside from slippage, spread also widens. Sometimes, spread can even double or triple because of volatility. This is why some traders prefer to use guaranteed stop loss. Unlike the traditional stop loss, which can fail when the market is moving really fast, guaranteed stop loss ensures that your trade is executed at the exact price that you have chosen. So you can also consider using guaranteed stop loss to protect yourself better. So yes, if you are interested in trading NFP safely, it may be a good idea for you to look out for brokers who offer guaranteed stop loss. One last important thing is knowing where to find the NFP numbers, because I've told you so much about NFP and I've shown you NFP reports, but the question is, how do you find it? So yes, the US Bureau of Labor Statistics releases the NFP data on the first Friday of every month. However, you don't have to go digging into government websites. As a Forex trader, you can simply use economic calendar to find the NFP reports. For example, you can find the NFP reports and other important news releases and reports on the economic calendar on My Trading Land. It shows the forecasted NFP numbers, the actual numbers, and also helps you compare the previous NFP reports to the current one. That way, it is very easy for you to make your comparisons and make trading decisions. But as a beginner, be very careful with chasing the first spike. One candlestick can move 100 pips, so you want to be very careful. So yes, the NFP is one of the most powerful news events in Forex trading, and it comes with big opportunities. But with big opportunities comes big risks. As a beginner, sometimes the best trade is no trade at all. If you have never understood what NFP means and you just want to start trading it, you can actually take out some time to trade it demo first, so you don't go live first. You practice trading NFP before you now actually trade NFP live. So take your time, learn before risking real money. If you found this video helpful, then you should definitely subscribe to this channel, because we will be posting much more helpful videos for beginner Forex traders. And of course, you should consider joining our free Forex trading community on mytradingland.com. Our community is free of charge to join, and you get the chance to interact with other Forex traders, pick their brains, learn from them, and also use some of our free tools like the economic calendar, the news tab, and just other free tools that you can find on there. Just visit mytradingland.com to get started. Thank you.